Welcome to another episode of technical analysis here on my channel. In our last video, we were talking about entries, order block, breaker block. We've actually took that in our last video. If you've not watched that, you can go back to the channel and watch the video on order blocks and breaker blocks. In today's episode, we'll continue with that same POIs and entries. And POIs being point of interest. That is that mode or that particular thing we see in the market that we enter the market with. And number three, we'll be talking about OTO, OTEs, and ROTO, meaning optimal trade entry and reverse trade order. In bracket, Fib levels, which is Fibonacci level. So we'll be talking about this, exactly how you identify a place or how you make use of Fibonacci levels, identify your optimal trade entry, and identify your reverse trade order, and how best you are going to trade it. Now, let us file it down. First of all, Fibonacci levels or Fibonacci tool is actually a particular tool that was introduced into the crypto or forex technical analysis chart in order to identify reversal trends. I repeat, it is actually a tool that was introduced into the forex technical analysis to identify reversal trend or to know the exact point that the market is going to reverse, or to actually get the discounted rate or discounted point where you're going to buy or sell a market. Now, let's take, for instance, we have a market trending this way. Let's say we have a market trending this way in a higher highs, higher lows, higher highs, higher lows. Let's say we have the market this way, higher highs, higher lows, higher highs, higher lows, higher highs, and higher low. Now, when the market is about creating another higher low this side, how exactly are you going to know the point it will get to, and then it will create its higher low around here and reverse and go? How will you know the exact point? That is where ROTO comes in, which is reverse trade order. You're looking for that point. You're going to take this the reversal of this trade. When it comes down to create its higher low, you take the reversal of it to continue the trend. That is reverse trade order. Whereas optimal trade entry, it is still a reversal mode, but it is the optimal point that the market will actually get to before reversing to continue its trend. So both of them is lying under this Fibonacci level. And we'll actually be moving to our chart to identify this Fibonacci tool and how we are going to use it after this explanation on the board. Fibonacci levels, when you use Fibonacci tools, you see things like this. You see levels like this on the Fibonacci tools, where you'll be having maybe 0. whatever, 0.2 something, 0.3 something, and then you have 0.5 and 0.618. Then this last one should be around 0.7 something. This is how it normally looks like. Now, mind you, or take it from me that I said 0.5 level is the reverse trade entry, 0.5 Fib level. It is the reverse trade order. That is the ROTO. That is the 0.5 level. Whereas the OTE, which is the optimal trade entry, is actually the 0.618 level, which is the optimal trade entry. The optimal level it might actually get to when a trade is looking to reverse and continue its trend in the market. Now, how are you going to get the pullback or the reversal of this particular trend before creating another higher high? That is where Fibonacci comes in. Now, you are going to be measuring the whole movement for this higher high. Remember, this is a new higher high here. So, a point where it started higher low, this higher low, the previous higher low to the new higher high before the market starts dropping to create another higher low. How are you going to identify the exact point is going to get to? It will reverse. Now, you have to use your Fibonacci rule, and measure from this point, which is the previous low to the higher high to the previous high. Measure from here to here. Now you get things like this on the Fibonacci tools that you use. Identify where 0.5 is majorly falling at the 50% move. Let's say from here to here, the 50% move of this particular impulsive move, that is the half of it, and the half of it should be around there. Half of this movement should be around here. So that is where 0.5 is actually placing out. So whenever a trade reverse to up to 50% of the previous impulsive or repulsive move that it has made, it has gotten to at least a favorable or a better reversal area, which is the RTO. But then if it gets to 0.6, it will actually be somewhere below. If it actually gets to 0.6, meaning it has gotten to the optimal trade entry, which is a particular place we call a discounted rate. This is a discounted rate. It has gotten to its discounted rate, and it is falling back to either 0.5 before creating another higher high, or it is falling back to either 0.6 before creating another higher high, which 0.5 signifies the reverse trade order and 0.6 the optimal trade entry. We'll be moving to our chart to explain this better so that you know exactly how to make use of it while trading market structure, or you're trading just the trend in the absence of liquidity, in the absence of every other thing. And you can equally learn how you can combine getting these 0.5 or 0.6 fib levels, then getting a confirmation, because you don't trade in isolation. So you have to get a confirmation of that particular zone, that yes, this particular zone, this is something that is situated in this particular zone. Most of the times, it can be an order block situating in the 0.5 fib level, or it can be a breaker block situating at the 0.618 fib level. So when you see these formations, or when you see these confirmations, whereas you can equally get an inducement, let's take for instance, after this impulsive move, it did something like this, or before the impulsive move, when it was creating the impulsive move, it did something like this and then created. You understand? It did something like this. This is actually can serve as an inducement. This level can actually start as an inducement, which an inducement is a liquidity drop. And remember, according to the law of liquidity, every liquidity drop must be picked up now or later, but it must be filled. Now, a situation where you have an inducement this way, and then you measure your Fibonacci from this point to this point, and your 0.5 level might be around there, your 0.6 level might be around there. Now, this inducement is giving you an indication that there is a liquidity pool around there. Money was dropped around there. So this money probably might be coming down to the 0.6 level. Now, it is already a confirmation, having an inducement that the market will come back to pick up before proceeding with the trend, and equally having your discounted rate, which is your ultimate trade entry, in that same zone. And probably you might have another block situating around there, or a breaker block situating around here, whichever way. Now, all these are confirmations you're going to use in order to identify which, if a Fibonacci level, if an OTE or a RTO is very strong to trade. Now, we'll be heading over to our chart in order to explain this. Now, if I see a trade like this with an inducement, instead of me taking the 0.5 fib level, which is the reverse trade order, as my entry, I would rather make use of the optimal trade entry because of this inducement here. Now, you might see something like this. It might get to the 0.5, bounce a little, but because of this liquidity here, it will go for a liquidity grab. It will go for a liquidity grab to the optimal trade entry before creating the next higher high, making here your higher low and then the next higher high here. So this is exactly how to use Fibonacci tool. Now let's move over to our chart in order to identify this better. But mind you, many people are trading SMC, market structure, price action, chart patterns and the rest, CTR, break of structure and all. But mind you, a lot of traders in the market who are making money are just making use of these simple strategies. They are making use of simple things that you might ignore in the market, like this Fibonacci, and then just little things that you think that it doesn't matter. But mind you, Fibonacci too has actually made people a lot of money than you think. Now, let's move over to our chart to identify this better. All right, this is a BTC chart, and we're going to be explaining Fibonacci and how you can use it to trade on this BTC chart. I'm trying as much as possible to make this video very short, but then I'll have to try as much as I can. Just stay to the end of this video and you understand what I already taught on the board. You understand it very well. Now, let's take a look at this BTC chart. From the chart, you already see that BTC has actually been on a downtrend for some time. This is a 4 hours time frame. I actually placed it on the 4 hours time frame. It has actually been on a downtrend here, where the change of character occurred, and then BTC has been on a downtrend, creating lower highs and lower lows, creating lower highs and lower lows. Let's drop it this here. Lower highs and lower lows. Lower high, lower low, a lower high on 4 hours. On 4 hours time frame, don't forget. And a lower low. Now, it has been producing this for quite a long time. Now, since it is still on a downtrend, I want to catch the reversal of this particular trend. Now, I have to map out this particular place that it broke structure, the last one, which this is the previous lower low, before creating a higher high, a lower high, and then broke structure here. Broke structure here, showing me, okay, at first, let me delete all this, because this was a trade I took, this was analysis I did on it. So I had to bring it on here to teach you people exactly how I did it and how you can equally do it. So this now becomes a break of structure. Let's label it. Becomes a break of structure here, creating another lower low. Creating another lower low. Now, what do I need to do? I made this market when the market was around there. Sincerely, this is where I met the market. When the market was around there, that was when I met the market, and this is what I did. Since the market was around them, this was the previous high, the highest traded point. This point was the previous high as at then, and this is obviously the previous low here. This is obviously the previous low here. Now, what did I do? I'm trying to catch a reversal entry point in order to carry on with the downtrend that we are. Now, what did I do? I first of all noticed a breaker block here. Notice a breaker block, which is another block, a bullish order block that didn't hold. It got broken by a breaker block. I first of all noticed a breaker block here, which I mapped out this way. I mapped it out. If you've not watched my other block and breaker block video, you can actually go ahead to watch my other block and breaker block video. You understand exactly how this is called a breaker block. Let's further ahead. Now, I map out my breaker block, and then since I did that, I'm now looking for a point where the market is going to reverse and go down. Now, as I met the market around there, I already know the market was on a reversal mode to find an entry and then continue its down movement. Now, I took my Fibonacci. This is my Fibonacci 2. Measuring from this highest top of that repulsive move, this down move that BTC did the previous time, to the bottom part. That's how to draw your Fibonacci. So I'm trying to measure that particular movement there in order to understand where is the 50% of the move and 0.6% of the move, which is the discount rate. I did it, and Fibonacci is going to show you everything. As you can see, this is 0.26, 0.236 line, 0.382 line, and 0.5. Now, that is to say that here is the 0.5 and here is the 0.6 Fibonacci level. Now, it is safe to mark it out with rectangle this way. This is not what I normally do. I'll mark both the 0.5 and 0.6 like this. That is what I normally do. Then I delete the Fibonacci because what I'm looking at is the 0.5 and the 0.6 level. Now, the start of this rectangle, which is this point, this side of this rectangle is the 0.5 zone, and the top of it is the 0.618 zone. That is how I marked it. Now, immediately I did that, I now notice that there is a breaker block. Since here I'm meant to enter from here, which is 0.5, but then this is 0.6, and there is a breaker block that I marked at first. There's a breaker block that I marked at first, which is just rightly above the 0.618 level. What did I do? I decided to go in with optimal trade entry, a short entry, which is at 0.618. Then above it, because of that breaker block that the market will definitely go for, I placed my sell order there, and then making my profit to be this previous low here. That was initially what I did. But then, like I said, I met the market around there. I met I met the market around there, like I said. I met the market around there. So just because I cannot just watch and see the market go that way, I had to follow the market, or I had to look for a way, to follow the trend to go back up, to go and pick up this my lower this thing, breaker block. So I had to reduce the time frame to 30 minutes. Now I'm showing you another trick where that made me took double trade. I reduced to 30 minutes. Now this 30 minutes, I saw more of the structure. I saw more of the structure. And here, see more of the structure. See more of the structure. I noticed that the market is equally creating a higher high and a higher low while going up on a retest, which there is a break of structure here. Now, when I saw that, I now noticed an inducement here. This is an inducement. The market left some money here. This point here is an inducement. And this is a demand zone just below the inducement here. This is a demand zone just below the inducement there. What did I do? I changed again to 1 hour time frame in order to see that demand zone very well. In order to see the demand zone very well. Now I zoomed out. After seeing it, I noticed another block on that demand zone here that I marked this rectangle. There's another block there. So what did I do? I took my Fibonacci again in order to justify or confirm that demand zone. I took it to the highest traded point, which is where I met the market. I took it to that point, which is where I met the market. And I noticed that the demand zone is actually lying on 0.618 zone, which is the very discounted zone, the optimal trade entry. So I placed my long order here on that 0.618. I placed my long order on the 0.618. Now using the 4 hours zone that I want to short from, as my TP, and then making here my SL. That is exactly what I did. And boom, I took a long. Now let me delete this Fibonacci tool that I've used to confirm. I made, and this is a 0.318 trade. I've made the long, and then the sell later came back and start selling as well, picking up my other block on the 4 hours time frame and equally start selling as well. So this is exactly, now I'm waiting for the sell to complete its movement, which is going to complete down to this previous low here. That's the one I'm on. So this is actually a breakdown analysis to teach you exactly how to make use of Fibonacci tools and Fibonacci levels. Now, do with this information whatever you wish. If you like how I make my videos and how I break down what I teach in this particular channel, like, comment, and share, and equally share to your friends so that they can grab this knowledge that you are grabbing all for free. Have a nice day. Shalom.